Hey investors, today we're going to analyze the Salt Lake City, Utah real estate market. First, we're going to look at the overall market of Salt Lake City, and then we're going to take a deep dive by analyzing an actively listed investment property, discuss things like cash flow, return on investment, expenses, renovations. By the end of the video, you're going to know if Salt Lake City is a good place to purchase rental properties and how much you might make if you purchase a rental property in Salt Lake City. So let's dive into it. I'm Dave Hathaway. If this is your first time watching, welcome. We discuss real estate, investing, and building wealth. The address we're actually going to look at today is 3922 South Atlas Way, West Valley City, Utah, 84120. Before we actually dive into that actively listed property, let's take a look at the stats of the overall market of Salt Lake City. So it has a population of 212,000, growing at 1.4%. As you can see on the graph, that is great. It has an unemployment rate of 3.1%, which is lower than the national average. So check the box there. Average salaries are $61,000. That's slightly over the national average. So that's great. Median sales price of homes is $524,000. It's up 3.8% year over year. So it's continuing to climb in sales price. So properties days on market is 47, which doesn't bother me too much. One thing to note is that's up 18 days, which is a lot. So it does show to me that there is going to be some cooling in this market. Even though prices are up, days on market have jumped, and that 18 days is a high percentage there. And so I would anticipate that prices will stay flat, and if that increases, they will actually decrease a little bit. So that's what I anticipate. Next is median rent, which is $1,525, and that's actually up $30 a month over month and $25 year over year. And so that's relatively low rent compared to those median sales prices. So I'd be a little bit worried there. When you look at the price to rent ratio, it's 28. It might be the highest market we've actually analyzed. When you're looking for cash flow on investments, you want that ratio to be somewhere around 15 or slightly lower. So 28 is super high, almost double 15. We talk about Fortune 500 companies, or basically employment opportunities in Salt Lake. There is no Fortune 500 companies, which I don't love. But there are some major sports teams, the Utah Jazz, MLS, Real Salt Lake. They have some minor league hockey teams, and Salt Lake City is actually lobbying to get a NHL and a MLB team, or one or the other. So you have some awesome sports there. There is the International Airport of Salt Lake City, and some really cool things is that there are 11 world-class ski resorts within an hour drive of Salt Lake. So if you are looking for an amazing investment that you want to go visit and you love skiing, this could be the place for you. Another thing that was interesting is it's higher elevation than Denver. Thought that was interesting. Market verdict overall, I'm going to give it 1 thumbs up. This is a very expensive market, so you're probably going to want to look around in a suburb, some sort of affordable suburb. When I did a little bit of research on the market, some people suggested West Jordan or Farmington, so a little bit south of Salt Lake City, but it's going to be hard to find cash flow here. Now, diving into the Google Streets test, if you look at the property that we selected to analyze, it's a normal property. The streets look fine. There's sidewalks, nothing that stands out. The only thing that's slightly suspect is that you see a tarp on the neighbor's roof and you see a few cars under a tarp. So I'd be a little bit worried, but maybe you have kind of a hoarder or somebody that just doesn't fix it up. It doesn't fix up their property next door, which could cause some issues or could cause you not to have great tenants. So I wouldn't just totally overlook that fact, but overall the street looks pretty good. So usually when you have one bad house, eventually that house gets sold or purchased and then gets fixed up. So I'm going to give the Google Street test a pass here. Before we move on to actually analyzing the property, I want to give a quick plug to our free cash flow analyzer. It's in the description, link in the description. We'll go over it here in a second when we look at cash flow of the property. I also wanted to plug our course, Master the Rehab 101. You can find that at www.mastertherehab.com. If you are struggling with going over budget on renovations, you're struggling with going over time, you're struggling with quality issues or finding bad contractors, and you want to level up your rehab skills, check out this course. It's the processes and systems that I have used to scale up to a 50-unit portfolio in renovating all the properties that I have previously. So check that out, link in the description if you're looking to level up your rehab skills. Moving on to the actual property. It's listed for $249,000. It's a 3-bedroom, 2-bathroom. It's 1,064 square feet, so a little bit on the small side. Built in 1965. And we're looking through these pictures here to see our rehab suggestions. I'd probably replace the front door, storm door, with a full glass storm door to make it look a little bit nicer. I'd definitely cap the fascia boards, which are the boards behind the gutters. I'd replace gutters. It looks like it might need to. And I'd also check for rotting wood on those joists. It looks like they're dark, so you definitely want to see if there's any issues going on there. And if there are, replace rotted wood. Now, moving into the house, I'd definitely replace all the lights. It's one thing that I commonly do that I feel like is a very easy value add. All the flush mount lights. I'd replace the appliances in the kitchen with stainless steel. It just looks way better in pictures. I'd replace the countertop with granite countertops. It's going to give it that bang factor. And if the cabinets are salvageable, I'd see if I could just paint them maybe a light gray, put some nice hardware on them, and keep the cabinet as is. And then moving on, I'd definitely replace the floors in the kitchen, some nice LVP. I usually use a LVP that looks like slate, and so I'd put that in the kitchen and the dining area. The hardwood floors in the main area look pretty good. I just clean them up as necessary. And then when you start to go in the bathrooms, the main bathroom looks okay. I definitely replace the mirrors. You know, I always do that. Put in nice frame mirrors to give it a good look. And I'd get rid of any wood grain material stuff in there. So like the storage cabinet above the toilet, I'd get rid of that. It just dates the property, so they look really old. And I'd put LVP in both the master bathroom and the hallway bath. And I'd obviously remove the wallpaper and give the whole house a new paint job. Make sure the lights look good. And I'd also address the closet doors, maybe with a dark gray. I often use a color that's called intelligent gray. I often use a color called intellectual gray. It's super dark, but it should give those rooms a pop. And so my rehab budget here is going to be $22,000. Might be a little bit higher than that. Might be $25,000, but we're going to put $22,000 at this point. So when I look at the analyzer here, and you can download the same analyzer in the description. I look at rents. Zillow says we can get about $1,793. I think looking at comps, you can probably get a little bit higher, but it's good to be conservative since this is a smaller house. So we're going to say we can get $1,793. Property taxes are $2,030. So property taxes are great. And then when you look at the cash flow of this property, if you just purchased it all cash, it would make about $1,211 or 5.2%. So not that great. That's the cash on cash return. And then if you put a loan on it, you refinanced the property at a 7% interest rate with a 75% LTV loan, looks like you get negative cash flow or negative $164 or minus 2.82%. And if you know me, you know that I do not like to purchase any properties that do not cash flow, and especially if they negative cash flow. So I'm going to give this property a thumbs down unless you can get an amazing deal, maybe get like $50,000, $40,000 off and make that a positive cash flow property. But even then, it's really not going to cash flow that much because you got a decent renovation that you have to put into this property. And so this is a appreciation play over a cash flow play. And so Again, I don't love it when you don't have cash flow, so I can't recommend this property. I think for this market, you're definitely going to have to find deep value add properties. And if I was trying to invest in or around Salt Lake City, I definitely join meetup groups, Facebook groups, connect with wholesalers, and see if I could find those deep value add properties that were off market that I could get for a really good discount and put a big renovation into them. So I'd have a good chunk of equity in them. So that is Salt Lake. Market thumbs up, property thumbs down. I'll see you guys on the next Deal Day episode.